Hello from across the globe, it's Amanda Bobbitt here, your network marketing tax advocate. Today we're going to dive deep on why having an in-home based business or network marketing business is one of the smartest things that you can do. And I want you to understand it, because once you understand this, you can share this with your teams to help them understand, so that we can help more employees become business owners on top of it, to save an average of $3,000 to $8,000 per year in their taxes. So instead of paying the government and taking money out of your pocket, you can keep more money. So just by listening to this seminar, you're going to be knowing and you're going to be in the know. All right. So before we get started, I want to introduce myself. My name is Amanda Bobbitt. I've been a business owner for 10 years, and I have 5 different businesses that I run. Professional network marketer, graduated from TaxBot University. I specialize in tax solutions for network marketers and in-home based businesses, tax accountant, and a tax strategist. How did I get into this? You're wondering. All right, so 3 years ago, I had an amazing year in my network marketing business. And I went to my CPA, which CPAs usually work for the government, and their job is to help the government make more money. And so when I went to him and I said, here's my QuickBooks and here's all my deductions and my expenses, he said, all right, here's your tax bill. And it was a large amount of money. I mean, a large amount of money. Some people's homes, their homes, are less money than I had to pay in taxes. So I paid that bill and I was like, really? That's what I got to pay? So I said, all right, fine, I'll write the check. Wrote the check, and then I started thinking to myself, who do I know that understands my industry? Because most CPAs are not versed in network marketing. They don't understand it. And who do I know that might have some opportunity that I can get them amended? So I remember selling my product to a gentleman who owns 5 tax offices. So I went to him, presented the information. He said, oh my gosh, yeah, you way overpaid. So I ended up getting thousands of dollars back. And I said, okay, how do I impact other people out there that are in these type of businesses that don't understand taxes and they're getting taken advantage of, and help them save money? So that's why I created this, and that's why I want to help you guys understand that being an employee and having a business is one of the smartest things you can do. Okay, so here we go. First off, we need to understand that there are 2 different tax systems. You have the employee, which is known as a W-2. That is created to take your wealth. Employees are going to pay the most amount of taxes, and you virtually have no tax deductions. Okay, so that's the employee. Business owners, those people are self-employed. That system is created to help create your wealth and protect it. Business owners create the employment and the economy, and because of that, there are massive tax deductions. All right, so the average American is overpaying their taxes $3,000 to $8,000 per year. So having a part-time, this is not full-time, this is part-time business out of the comfort of your home, you can save that money. Just taking your living expenses you're already doing now and redirect them into business expenses. And here is how. The easiest solution is to move you from that employee mentality, the employee, to a business owner. You can be both. So join a network marketing company that you're passionate about. If you don't know a good one, let me know and I'll teach you what I know. Spend just a few hours a week working in your business. That's how you do it. It's not that challenging. Why is it important? Think about this. 46% of average Americans don't have $400 to their name. 66% of Americans don't have an extra $1,000 to their name. And once you get done with this seminar, you're going to understand why. Taxes is the biggest expense for employees. So out of every single dollar you make, you get to pay the government 40 cents. That's almost half of your paycheck you're paying to the government because of not having an in-home based business in the tax deductions. More money is spent on food, housing, and clothing and transportation combined in taxes versus what you're spending in those living expenses. So think about that. You're paying more in taxes than you are on all your living expenses. 40%. So what's the plan B? How do you get out of this rat race, right? How do you become saving more money? You start an in-home based business, network marketing business. So I want you to understand this, that the average household income in the United States is $60,000. That's between husband and wife, spouses, right? $60,000 is average. Notice at the top here, it says business expenses, 0. Then you have your standard deduction, which is 24,000. So now you get to pay taxes on the 36,000. FICA gets taken out of your paycheck. So that's what gets taken out of your paycheck. Federal income gets taken out of the 36, and the state tax, some states don't have the tax, most do, that gets taken out of the 36. So out of that 60,000, you are paying $10,700 in taxes every year. So now the problem really becomes is that to live in the United States, it's around 53,000. So every year you're going in debt just to live because you don't have an in-home based business. So that means that your take home is $49,240 and the cost of living is $53,000. So you're actually losing almost $4,000 a year. That is why you got to go get credit cards, and now you have credit card debt building up and you can't pay the interest. You are trapped without what I'm about to tell you. So what is a tax deductible expense? Any expense incurred for the purpose of gaining or producing income. Incurred with a reasonable expectation resulting future business and is reasonable under circumstances. So as long as you qualify for that, you can do it. So you want to redirect your living expenses into tax deductions. So 2 different scenarios here, okay? So we have the first one, which is a W-2 employee, living expenses. Think about this. Right now, you are not deducting your meals. You're not deducting your cell phone, your travel expenses, your internet, your automobile, your office supplies, your daycare, your personal development. You are not taking those as deductions. So what that means is you're spending $49,000 because at the end of the year, you don't have uber amounts of money left, right? You're going in the hole. You're spending that money, but you could be redirecting that into living expenses and be deducting those to get money back at the end of the year. So now this is how this works. So imagine that you started an in-home based business. Maybe it cost you $100 to start it up, or it cost you $5,000 to start up. You start it up, okay? Now the business use of your home. You have your office, you have any area that you're using business for. That becomes tax deductible. You have your meals. Let's say, you want to go to lunch with your friend. And you're like, hey, Franny, I got something to share with you. I got this amazing product and I want to talk to you about it. I will go to lunch with you. Now, because you talked about the business and your intention was helping her and getting her set up with this, even if she did not buy, you can deduct 50% of your meal. Miles in your car, let's drive there and drive back. Let's go to a different area that maybe your mom lives in 200 miles away. You're going to talk to her about your product or your service. Now you can deduct that and get 58 cents per mile back because you're driving for your business, even if you're going to go have fun while you're there. What about your cell phone? You think you can call some people every day to say, or text them and say, hey, I got this amazing product, check it out? Yeah, absolutely. All right, what about your internet? Yeah, you can deduct that as well. Your traveling expenses, you want to go on a vacation? Unequivocally. Yeah, go to Hawaii, go to anywhere you want to go. France, you want to go on a cruise, you want to go to the Mediterranean, you want to go to Hawaii. It's for business now. It is not for pleasure, it is for business. You're talking to people when you're there. Your intention is to help people with your product. Now, your flight, your meals, your hotel expense, anything when you're there talking about business, making appointments, it is tax deductible and you are already spending the money. Personal development, any coaching courses you have out there, those are also tax deductible. Office supplies and legal fees. You got a computer, you need paper for your business, tax deduction. I mean, you need a TV for your home because you're going to have people over and they're going to watch the TV and your product. You've got to have a tax deduction for that. You got to have office furniture. That is also tax deductible. So now imagine we spent $25,000 doing things that we're already spending the money for. And we can write that up as tax deductible items. So here is the next scenario. Look, how we just told you about the 60,000, you're negative 3,760. Now you have tax deduction. So notice it says business expenses there, 25,000. Look, your net income minus the 25 minus the 24 standard deduction is 11,000. That is what you pay taxes on. So the lower amount we can get that number, the less taxes you have to pay. So now FICA, taking out your paycheck, still the same, $45.90. Federal, look, that went down almost $3,000. State went down, what, $1,500. Now, instead of paying $10,000, you've already saved almost $4,000 in taxes. So at the end of the day, you're making money by having an in-home based business, even though they were just living expenses. Can you see how that saves you money? So now you actually don't have to go in debt just to live. You have a positive cash flow at the end of the month. So how are you going to qualify for this? You must work in a network marketing business 45 minutes a day. That is not hard. 3 to 5 days a week, that classifies you to the IRS that you have a business, not just a hobby. You got to be doing income producing activities. So you've got to be texting people, calling people, putting Facebook posts out there. When you're in the grocery store, you're talking to people. That's all considered prospecting, which is producing income. Okay. Now, these are some things that are very standard to deduct, and these are going to give you the most deductions. Okay. So we're going to talk about car mileage right now. So when you're driving your car, whether it's around town to talk to people about whatever your product is, or you are traveling 5, 6, 7, 10 hours to visit your mom, it's her birthday and you want to go visit her and you're going to talk to her about your product, you can write off your miles that you drove. And the government will give you a deduction of 58 cents per mile. So this equation here, let's just say, for example, you spent 15,000 miles driving for business. You can deduct that at $8,700. That is a deduction, even though you would have went to see your mom anyways. So now you can save on your taxes because of that. So that's one scenario. Here's the actual mileage. So we'll plug our numbers into the system to see which works better for you. But this one, you got to decide, what works better. But the mileage on this one is what counts. So you take the average. So let's imagine here that your car, you drove 10,000 miles. And the business miles was 8,000. Now you get to deduct 80% of the car, of the cost of the gas, the oil changes, repairs, supplies, interest, and car washes. So you get to deduct that in your car payment. So that is the deduction. You can't take the miles, but you can take everything else, okay? So if you, for example, have $12,000 of actual expenses and 80% of that was business usage, $9,600 you can deduct. So we plug it into the system to see what works best for you, but this is what I would recommend, is the actual usage. Now, you also with this one can depreciate your vehicle, meaning you buy a $50,000 vehicle. You can deduct that over 5.3 years. So the first year, you're going to take about 10,000 something dollars, next year 10,000, and so on and so forth. So you get a deduction every single year, which lowers your income, so you don't have to pay as much taxes. So your vehicle becomes a tax deduction. The only qualification here is the vehicle must be new to you. That doesn't mean you have to go buy a new vehicle, it just means it has to be new to you, it can be used. Now this one is really cool, right? So if you're making good amount of income, this is where you want to use this one. This is called Tax Law 179. This one, you can depreciate 100% of the vehicle the first year of owning it. So if you're qualified, which means your vehicle has to be over 6,000 pounds. So you got a Mercedes, you've got, I have a Range Rover that's over 6,000 pounds. You've got your luxury vehicles, which are over 6,000 pounds, Tesla over 6,000 pounds. So now you can deduct the whole entire thing under Tax Law 179, the first year in business. So if you have a lot of income, this will offset that so you don't have to pay as much in taxes. So imagine if your business makes 100,000 and the car you bought, even though you financed it, was 80,000, you'd be left with only 20,000 of net income to pay taxes with. So which will lower your tax liability so you have more money back in your pocket. Okay, so that's where this works really well. Okay, so now that you know this, I want you to understand that we have LLCs, we have S Corps, we have C Corps. So at what time, if you are making income, at what time do you change and do something different instead of being an LLC when you start to become an S Corp? So once you make over $10,000 as net income in your network marketing business, I would highly recommend we switch you to an S Corp. Because any money you make, you get to pay self-employment tax on. So personal income, if you're just getting a 1099 personal income, you get to pay self-employment tax, which is 15.3%. When we take your LLC and we treat it as an S Corp, you now get to save almost 15.3%, about 80% of that. So the scenario here is, okay, your network marketing business made $60,000. You're gonna have to pay the self-employment tax, which is $9,180 on the income that you made. So being an S Corp, you're able to save 80% of that. That is huge. So if you look at your taxes from the previous years, or you know you made more than 10,000, it's time to help you save that money. Also with that, you now get a 20% pass-through deduction, which means on your personal tax return, because your business is separate from your personal, on your personal tax return, the income you got from your business, you can also have 20% of your income as a tax deduction. So here's where that works. $60,000 net income, you save 20%, 12,000 goes on your personal return. Crazy, isn't it? Okay. Why network marketing? Because the average W-2 employee is going to save $3,000 to $8,000 a year typically. Because you're entitled to those tax deductions, you're already entitled to them. Jobs are being replaced every day by artificial intelligence, by internet, and people are losing their jobs. School system is broken. You must have multiple streams of income. What happens if we get, fired from our job? We don't have something on the side. Or the coronavirus and we're all stuck in our house. We don't have any job to go to because we are now unemployed. You've got to have something. So that's why it's so smart doing this. So if not this, then when? If not this, then what? What are you going to do? Share this information with everyone you know, as you can completely impact every person's life, not only physically, but financially, just by giving them this knowledge. I want you to go to my website. I want you to download your free tax guide, which gives you a list of all the different deductions available for you. Go to amandabobbitt.com. I also have an email, amanda@amandabobbitt.com. Okay, so go to amandabobbitt.com and get that information. We are a full service business, so we do accounting, we do LLCs, we can set you as an S Corp, we do bookkeeping, payroll, tax preparation, we can amend your tax returns, tax strategy sessions. I mean, we do everything. And we're here to help you. So reach out to us and we'll help you guys understand this. Schedule your complimentary tax session. So all you got to do is go to our website or just give us a call and we will talk to you over the phone and help you understand how much money that you can save by having an in-home based business. If you don't already have one, let us know. We'll get you a good one. And those of you that do, we can go back 5 years now in your taxes and get money back that you overpaid. So think about that when you're doing your tax return. We're very competitive in the marketplace as well. So I want you guys to have this information, share it with your team so you guys can go out there and pack the globe, not only financially, but doing your health as well. So physically, financially, with that comes a peace of mind. So I look forward to seeing all of you soon. Give me a call and we'll discuss the options for you. And until I see you, be happy, be healthy, and be free.